Hi, welcome to Nebi Invest. So in this Appendix 4C episode, I'm going to do something a little bit different and include a mining company. Now, non-mining companies, it is actually called an Appendix 4C, they're called the cash flow report. But for mining companies, they release two sort of reports. One of them is an activities report, the other one is a cash flow report. Sometimes they combine them together. So just subtle differences between the two, but largely they're the same thing, and largely the most meaningful information you can get out of these sort of reports is what's happening with the quarterly cash flow. So let's get into the first of these three companies I'll be looking at today, and that company is Red River Resources. Now, for full disclosure purposes, I am a Red River Resources shareholder. So Red River do some producing and exploring in zinc, lead, copper and gold. Now they're a little bit more diversified than that, but the thing that does attract me to this company is they are a producer and they are bringing some money into the company. And probably the other thing that is attractive to me is I think the valuation. Market cap of 119 million, not that high, especially when you consider they are bringing in revenue of $63 million in the last financial year. But a big cross against their name for the last financial year. They were operational cash flow negative by 8.6 million. Now they have turned things around. In the last 2 quarters, they have become positive in operational cash flow. So let's get to the most recent quarter. So very similar to the Appendix 4C, you'll see from non-mining companies, receipts up the top and operating cash flow positive or negative down the bottom. So Red River brought in $31.8 million in receipts last quarter and were operational cash flow positive by $4 million. That's a little bit lower than the previous quarter. The previous quarter, they were operational cash flow positive by 12.5. And that's one of the main reasons I jumped on. I was a little bit hesitant by jumping on because there's still a little bit of negative vibes or sentiment around management of this company. And I think you can see that in the market cap and the share price right now. Another little interesting thing is they began the quarter with $12.5 million of cash and finished it with 13.3. That in itself is not unusual because they were operational cash flow positive. But when you look at the fact that they did borrow $1 million, and that $1 million was the reason they did raise their cash on hand, is a little bit interesting in my opinion. They did spend a little bit of money on capital expenditure and exploration and valuation, which is to be expected for this sort of company. Now, this is their receipts history going back to January 2018. It does look fairly lumpy, and you can see some quarters are quite bad, particularly with cash receipts and operational cash flow. Particularly October 2019 to April 2020, we had 3 bad quarters in a row. Looks like things might have turned around the last 2 quarters. In fact, the last 2 quarters, we did see record receipts for the company and cash flow positive, about $15 or $16 million of cash coming into their operations. And if you look at the growth rate from 2018 to now, over 3 years, it's been growing at 5.4% per quarter. But I like to see, and I think the market probably agrees with me, they like to see a little bit more consistency in that growth, and I like to see consistency in the operational cash flow positiveness. So I think maybe that's what the market is waiting for before they re-rate Red River Resources. So in saying that, there has been a significant re-rating in the share price of River since about June, July. So share price did get down to about 5 cents during the COVID-19 financial panic, and it's been gradually going up since then. I think the turnaround and the sentiment change in Red River began around June when the share price went to about 7.5 cents and rose quite good from there up until the peak in share price around 32 cents in January of this year. I think maybe a bit of the sentiment, negative sentiment in the share price of Red River revolves around the negative sentiment in gold at the moment, just because they have started up their Hillgrove gold production. So that could be a reason why. But they are diversified, so I think that should play some part in the future share price appreciation of Red River, or hopefully for me. So hopefully they can remain operational cash flow positive in the next few quarters. The next company I'll be looking at is Metavisor. They do what they define as medication management platforms. So they sort of allow people to manage their own medication. They that sort of thing. They did a major acquisition in November of last year, and that led to a significant capital raising, but it didn't do much with the share price. But it has done some interesting things with their cash flow, which I'll get into the next slide. So MedAdvisor, ticker code MDR, market cap 127 million, so quite a bit up there. And when you look at the last year's financial numbers, revenue of 9.6 and operational cash flow negative 8.7, you definitely want to see that sort of, or that, especially that last one, that operational cash flow, you'd like to see that turn around, particularly with a market cap of 127 million. So you can look at their Appendix 4C. They released that on the 21st of January, so they're one of the first companies to release their Appendix 4C, and in my opinion that's a good thing to get your Appendix 4C out there before the rush towards the end of the month. So this is the operational cash flow for the most recent quarter. So receipts from customers 10.7, and we get to the trend, you'll see how much of an increase that is from the previous quarter, and that's all because of the acquisition they made. But the acquisition they made did do some good things to their operational cash flow. They are still negative by 655,000, but that's a significant increase from when you compare that to the previous financial year, which was operational cash flow negative by 8 million plus. Now they began the quarter with $11.1 million of cash, so plenty of cash on hand to make acquisitions, and they did make an acquisition, and they finished the quarter with 21.2 million. Now, the reason that's increased, even though they did an acquisition cost $29.2 million in cash, is because they did a capital raising, and they brought in, through that capital raising, $42.4 million. So no doubt there was a fair bit of share dilution for current or previous shareholders. So this is their receipts history, and you've got to take this little bit of grain of salt just because of the massive increase in cash receipts because of the acquisition they made. So the compound quarterly growth rate between from January 2016 to January 2021 is 13.9% per quarter. Now, I've taken that last quarter out, and I started to see the growth rate in cash receipts, just taking out that acquisition. And they're still growing at 8.2% per quarter, so still growing, but this acquisition has put sort of a rocket up their cash receipts in the previous quarter. And I do recommend going through the that quarterly cash flow report, because they do explain a lot of additional information about how this acquisition has helped their business and how it has actually, that company has been doing since their acquisition. Now, so this is the 1 year daily chart, and there's been a lot of pressure on the share price since about May. So a lot of companies saw their share price, their sentiment and the trend change in June, July, but MedAdvisor has done the complete opposite. So a lot of other companies have seen the share price just continually rising since that time, and MedAdvisor's share price has been really under pressure. It's gone from a share price of about 60 to 50 cents and is right now at 36 cents. So a good, well-defined downtrend since June, July, which has continued even with a couple of positive news. The acquisition and even their quarterly cash flow report did put a little bit of a rocket up the share price on that one day, which I'll get to in the next slide, but still that did nothing to the share price over the medium term. And this is the 6-month daily chart, and you can see the acquisition of Etherstack, that was the company they acquired, was in early November and did nothing to the share price. In fact, the share price kept on dropping, got to a low of about 32 to 34 cents on the day before they released their Appendix 4C. And when they released their Appendix 4C, the share price rose 19% in that day to 40.5. So the market did like the report, but ever since then, the share price has been dropping. And this is all about psychology. So when the share price rose to about 40 cents on the day they released their quarterly cash flow report, all those shareholders that have been buying the previous 4 or 5 months have seen the share price rise to the price they bought in and went, oh, I can get out of this dog stock and break even. And that's the whole psychology of investors, particularly when the share price is dropping. They consider the company to be a dog stock because the share price is dropping. That's all they use to consider a company a dog stock. And when they see the share price rise back to the point they bought in, they decide to sell. Now, I've seen this over and over again. I've seen this with colleagues at work who have just flat out told me, when the share price gets back to the share price they bought in, they're going to sell. This is not for MedAdvisor. This is for companies they've bought in and the share price has dropped. The fact that they've said, as soon as the share price gets back up to the point they bought in, they're going to sell, regardless of what's happening with the share price if it's gone into a new uptrend. So that's all about psychology, the mental state of the investor. I won't do that sort of thing, because typically if the share price has dropped since I bought in and it's gone back up to where I bought in, typically it's potentially going into an uptrend. So I find it fascinating, that sort of mindset that you'll just sell out when the share price gets back to break even. End rant. The next company I'll be looking at is Etherstack Wireless Innovations. So you can see what they do, a little bit of a blurb they've got on their website or somewhere on the top right there. So the really interesting thing about this company was the massive rise in share price in, I think it was the 30th of June last year, because of the announcement they made. The share price rose 1,300% in one day based off this announcement. And then I think the next day the share price rose an additional over 200% before we saw the share price pull back quite substantially from then. So market cap of this company is 85 million, revenue in the last financial year 7.9. Interesting thing about this company is, even though fairly low revenue, 7.9, they do have high margins, and you know they have high margins because even though they have only $8 million in revenue, they are operational cash flow positive by 2.6 million. So have a look at their Appendix 4C, 29th of January 2021, to get a better indication of what this company does, or any sort of presentation this company has released over the past 6 months or so. So this is the most recent operational cash flow report. Now they do report in American dollars, and you can see receipts and customers only $1.1 million, but even though they only had receipts and customers 1.1, they're operational cash flow positive by $470,000. Now they do mention right at the bottom there, development costs are capitalized and are shown as investing activities in 2.1E, which is IP, which I've got here, IP or intellectual property, is $623,000. So if they didn't capitalize it, they would have been operational cash flow negative. So that's a small interesting thing there. Now they began the quarter with under $1 million in cash and finished it with $4.2 million. That's because they did a capital raising during the quarter. So this is the cash receipts history. Now this company hasn't been on the ASX since 2019, but they started doing Appendix 4Cs then. They do have a long history, it seems like, through some history. Now, I've got to confirm this history, but they do go back to at least 2012. Now, going back to 2019, it's only 6 quarters of history we do have here. It does look fairly lumpy. No real trend here at the moment, because the last 2 quarters look like the first 4 quarters there might have been an upwards trend, but compound quarterly growth rate 3.9%, but I don't really believe that right now, just because it does look fairly lumpy. And because I only had 6 quarters of history, and we do have financial data, yearly financial data going back to 2012, I can see what the company has been doing since then. And even here, the revenue has been quite lumpy, and even the operational cash flow has been lumpy as well. Overall trend has been up simply because of the last quarter. But you can see some years, 2014, 2016, were actually higher than the most previous year. And in fact, the trailing 12 months includes the most previous half year and the end of the previous financial year. Operational cash flow positive over the last 3 years. That's pretty good. But the market cap has really taken a bit of a rocket over the past year or so. In fact, the market cap right now, 85 million. But if you go through the history, typically it's traded between about, say, 10 million and 30 million in market cap. Now, the operational cash flow growth rate has been about 10% per year. But again, if you go when that started, it was actually negative, and it's gone positive again. If you go back to 2014, in fact, the growth rate of operational cash flow has been negative, and the market cap has been growing at 7% per year. So right now, I'd like to see a little bit more information about the growth rate of this company, but there are promising signs, and the market seems to have picked up on those promising signs and has derived a higher value for the company, with the market cap around $85 million right now. I think a large part of that is because of the announcement they made in end of June last year. So this is the 1 year daily chart. You can see a massive share price increase. They did assign a global teaming room with Samsung for 4G, 5G, public safety. The market loved this. Well, on the day and the day after, the market loved it. Share price rose 1,300% on the day. And then the next day, the share price went from a close of $1.70 and went to a high of just above $3.50. So massive increase in share price. I hope you didn't buy this at the high because the share price has just cratered since then. So a very interesting thing that happened with Etherstack back then. You can see the power of an announcement. And I haven't even looked at this announcement, but the market loved it. And maybe I would love it too if I read it. Now, this is the market reaction over 6 trading days from when they released it. Now, the interesting thing is the day of the release of the announcement was the first day in 18 trading days, or actually not 18 trading days, 18 days, that there was any trading in this company. So this was a very liquidly traded stock. So you can see the previous day was the 12th of June, went down 14% on that day with 95,000 shares traded. No trading between the 12th of June and the 30th of June when they released this announcement to the market. And the market and the share price went up 1,358% in one day. The next day, the share price went down 40%, but the high of that day was $3.70 and finished at $1.04. And then ever since then, the share price has been going down. So this is the last 6 months in trading with Etherstack, and the share price has been going sideways. So what you'd be looking for here is some sort of signal, some sort of breakout. It looks like the breakout might have wanted to happen in maybe with the release of the Appendix 4C. It looks like the share price did want to get up to around 80 cents or so, but there's a lot of selling came back into the market. And I think a lot of those selling were those people who bought on at $2, $3 with the announcement in end of June. So there could be still a lot of resistance if the share price goes a little bit higher. So what we want to do is see all those sellers, all those buyers who bought in with that announcement to sell out. And once they get exhausted out of the market, that's when the share price can go higher. So that's all I've got for this quarterly cash flow and Appendix 4C video in regards to Red River, Metavisor, and Etherstack. If you have any questions about these 3 companies, leave it in the comment section, and hopefully I'll get to it eventually. And that's all for this video. Again, I'm not a financial advisor, so even though I am looking at these 3 companies, it doesn't mean I am recommending or advising you buy them. If this is just about me sharing ideas, and if you like some of these ideas I've shared with you, maybe you could do some further research and maybe form your own opinion. Otherwise, I'm not a financial advisor again. So if you do need financial advice about your own circumstances, make sure you seek out someone who is qualified and can speak to your own financial needs. That's all for this video. Have a good day.